I think it's interesting that you also mentioned the fact that half of your students are former adjusters on the other side. I get the same thing all the time in our courses. We get former independent adjusters in our meetups that we have and our group gatherings that we do, our little, little mini events that we do. We
I
get
like them. Been promoting them.
a ton of independent adjusters, and they're just sick and tired. They're sick and tired of going in there thinking that what they're doing is, doing the best that they can for the insured, doing the best they can for the policyholder, and putting them back to their pre-loss conditions. And that's what I'm here to do. I'm here to save you. I'm here to save the day. I'm here to help. Here's this estimate for $300,000 to do everything that you need to do what you have to do. Let me submit it to the insurance company and forget about it. But then when they start to find out about what happens to those estimates that some of them that put together, and they just get samurai sword sliced and diced into just $50,000, then they're just like, wait, what am I doing this for?
Let's look at it like this. $50,000 according to what? What was best for the insurance company.
Exactly.
And that damn policy was never written with that intent. One of the things I love about boot camp so much is when we go over the coverages and we go over the additional coverages and we get to the service charge for a fire, the part where if you pay if you have a fire and the fire department comes out and they assess, a $500 fee, then the policy will actually pay that without charging you a deductible. So the way that we look at it in class is kind of two different ways. Number one, the person couldn't afford the deductible to begin with. If they had the fire, say, and I think of my mother, when she had a fire, if you paid the $500, it would really put you out for the deductible, and they put the fire out. So there's no more money. So that policy was intended. If you look at that fire, that section of the policy, it shows you the true intent of what the policy is. It shows you that they intended to make sure that the insured was made whole. It wasn't until 10, 15 years after they got this thing started and they got the bean counters involved, and the bean counter said, wait a second, we can't go around paying everything that we owe. If we do, then we'll make less money. So when the bean counters got involved, then they started to whack things down, like you're talking about putting in a $300,000 estimate. There's two screw-ins going on there. The insured's getting screwed no matter what, but that IA is also getting screwed because they're taking away from his fee schedule and then turning around and paying it from the desk side.
Right.
So, and these are all manipulations contrived to do one thing. What something that's blown my mind here recently. It's occurred to me that we forgot why we have prompt payment statutes. It's just like feed the bear signs. How many people did the bear have to maul before somebody finally said, hey, let's stick a sign up there that says don't do this anymore?
Why do you think that's why these limits and these statutes and that's why these things occur? Because of the amount of times that people have had to wait months and years just to get a payment, to get somebody out. I still have claims to this day, Cal, that they take 3 weeks just to inspect the property, when they're supposed to be out there as soon as possible. As soon as the claim is filed, they're supposed to be out there within 14 days to inspect the loss. If not, it's the job. It's our duty to provide all the documentation. It's our duty and our insured's duty to notify the insurance company. Well, son of a bitch, you need to come out and inspect it too. And sometimes they just take forever to do that too. So that's why, I agree with you. Thank God that we've got these things now put in place that at least we could hold their feet to the fire and hold them accountable.